This is our Forex blog for January 4th, 2012. And like most days, we want to look at the currency meter to find which currencies are the strongest and which are the weakest. And I primarily focus the real-time strength or weaknesses on the top, then we have the daily, weekly in the middle, and monthly trend on the bottom. We're comparing all the currencies to all the rest of them using multiple time frames and multiple different statistical tools. Some of the tools we use measure the direction, and some measure the intensity of the direction. We average it together for a very easy to read. You know, when you're using multiple monitors and watching 12 plus currencies in real time, you want to try to make trading as simple as possible. So, you know, if like in the Swiss today, it's weak on all time frames, you want to sell that. You want to sell that versus ones that are strongest on all time frames. The Australian, the New Zealand, you know, strength here, a little bit of weakness. It's usually safe to assume that the strength will return if the daily, weekly, monthly trend is strong, same as this one. The yen also has a very strong weekly, monthly trend. So if you see intense strength like that followed by very little weakness, usually the intensity reverts back to what the longer term trend is, like right here coming up to 6. This is a very and often repeated pattern. And you see a lot of momentum followed by a counter trend move with very low intensity. When the momentum move is to the direction of the weekly and monthly, it oftentimes resumes. So coming up to 530 right here, you would be anticipating the yen continuing its strength. And the Swiss is extremely weak. The euro is weak on all time frames. So the euro yen would be a great one to be looking to sell. First of all, if you look at the chart of the euro yen, when price is underneath the hourly, it's much more likely to go down. When it's above the hourly, it's more likely to go up. When it broke from underneath to above the hourly, came back and found support right here, typically it's a reversal pattern. If it goes and breaks out above, you know, these bars high or even this bar high here, because it's not too many pips away, you buy. But if it doesn't, you do nothing, and therefore you avoid an unnecessary loss. That's the key behind our trading. It came back down underneath the hourly. You can see the momentum to the downside was more than the momentum on the way back up. And a lot of our traders use range charts. Here's what a 6 pips per bar range chart looks like. And also before that counter trend moved back down and back up, we have a counter trend sell signal right here. Any of our 3 and 4 hour trend reversal, huge yellow reversal signals usually, you know, precede a big drop like this. So it was pretty easy to, once you see that pattern here, you know, look to sell it once it breaks back down underneath the hourly. And on our range chart, notice how our trailing stop, which is based on our statistical trend tool, kept you all the way in, all the way down here till about 64. So you might have gone short here and made 40 pips. And usually when currencies are at and underneath the white containment band, you're going to get a reversal. So if you had sold it again on this little pullback right here, or when it broke the low, when it hit the counter trend or the containment band at 30, pretty decent place to get out. You also want to use trend lines underneath pullbacks, lows, and when it breaks, you go short. And notice how a trailing stop got you out here at 17. You would have had about 20 pips on that one. As well as you always want to draw your fibs on the chart to, you know, most of the time when the price is underneath the lower containment band, somewhere between the first and 1.618 fib target, it's going to run out of steam. So if it comes down there and goes sideways, I myself personally would have been out somewhere here at 15. This last trade here generated over 20 pips as well. Let's look at the Swiss. Very weak, and the yen is very strong, so you would want to sell the Swiss yen. Now, there's 3 containment bands. You don't have to use the 1.5 red one. The 2.0 white band, usually for most currencies that aren't the weakest ones like the Swiss yen was today, is, you know, you don't want to really sell a currency when it's too far underneath that white band, because the risk versus reward goes down. It doesn't tend to continue when it goes underneath here. When it does, the 3.0 green band is a very high probability maximum place for the price to go, and typically at this level you can look for pretty relatively safe counter trend moves. Now you can see this one shot up 10-15 pips, came back down on here again. You'd be long and kind of waiting to see. It's more likely to reverse now since you can see the statistical weakness has kind of fallen off a cliff. And when currencies do run out of weakness, they will typically reverse at least 50%. So if you had bought down here, 81.70, 75 is a good profit target. That's 40 something pips away, and from where your entry is 30 or 40 pips away. You're risking 10 pips to make 30 or 40 pips. And that's counter trend trades tend to be lower winning percentages. But some of the good trades on here is once it started going down, you have this nice little pullback here. You would have probably bought this or sold this pullback right here, and you would have had a loss there. Again, when you sell underneath the lower white band, you can oftentimes have a move that starts to go your way, then it ricochets, and then it pulled back up and wasn't able to go higher. You can see extreme weakness. The counter trend move had very little strength. Anytime one directional move, a counter trend move, has half or less of the visual difference, you can see it's clearly less than half of the momentum of the down move. It's very likely to continue. And again, always draw your fibs on the charts. Most of the time, the price goes to these fib targets. You see that? Almost to the pip. If you were a really aggressive trader, you could have bought here around 44, 47, and it went all the way back up to 62. Well, actually, that's not much, actually, but you could have made money at this very high probability reversal area, especially since it had a Fibonacci profit target level there, too. It's tough trading a currency that is showing some bursts of strength. The pound here has a lot of strength followed by a little bit of weakness. The weekly and monthly trends down. So it's best to avoid currencies like that. The New Zealand and Australian, very strong on all time frames. You could have traded those against the Swiss too. The Australian Swiss, you can see it just went straight up. And again, notice how once it went from below to above the hourly, it just pretty much took off. And it's always a risky thing to do to buy above the upper white band. So if you do and it goes up 10, 15 pips and runs out of steam, get out of those trades, lock in. Even if it's 3 to 5 pips, it's better to lock it in and wait for a pullback and get back in. I typically, the minimum pullback I look for is a 15 pip pullback. This was one of them right here. It was going up. Nice, smooth, orderly 45-degree pullback with half the weakness pretty much that the strength had. And the daily, weekly, monthly trend of the Australian Swiss is extremely strong. And you go and get in this trade and you draw your fibs. You can always get into this trade and put your profit target a few pips underneath the 1.382 if you have to work or have to leave. 97.25, you're in this trade somewhere around 93. So you made about almost 30 pips in there while risking 10. And that's the key to trading. Small losses, big wins. Hopefully you're 50 or 60% right in your trading. Some days are easier than others. Try to avoid trading on days that have low volatility. And also avoid two currencies that are both weak. The euro is weak, the Swiss is weak. It appears the Swiss is weaker than the euro, but you're likely to have very choppy trading when that's the case. Watch this. It shot up and then down, up, down, up, down. Very choppy, 15 pip range. None of the bars hit an extreme level of strength or weakness. It is above the hourly, so it's much more likely to go up than down. But nonetheless, it's very hard to trade two currencies like that. The Australian and New Zealand, both strong as well. If you avoid currencies like that, here it's below the hourly, breaks out, fails, comes down. Notice how choppy it is. Most of the time for 3 hours, it's in a 10 pip range here, and then it finally broke out. Again, above the hourly, it's much more likely to go up. If you're trading a currency that doesn't have that much strength, draw your fibs on there and, get out the first or second fib target.